Hello and welcome to the Investor Master Series. My name is James Boyd. Welcome to you. And also, it is actually Tuesday, May 20th. We welcome everyone here today. This is not a one-off class. We meet every week at this time. It is live and recorded. So let's go ahead and get started. Just real quick as we get going, we got Peter here. Hello, Mehdi, Joe, high speed, low drag, Paul. We also have Brittany from upstate New York. Brittany, I grew up in Ithaca, New York. My dad taught at Cornell. That's a great place, especially this time of year. My gosh. And also Ken, Billy, Will, W, Josh Pink, and many others. We also have Barbara Armstrong in the chat, fellow instructor. We welcome her. Now, just real quick, I'm going to give you some resources, some links here in just a moment, so be prepared for that. And also be prepared to actually bookmark those so that way you can always find them easily of how to actually check out our classes, live or recorded. Now, just real quick as we get going, Barbara and I do post educational content on X. There's my handle at James Boyd CS. You can also go to at Barbara Armstrong CS as well. Just be aware that our the first letter of our name is capitalized, first letter of our last name is capitalized, CS. We do not reach out to anyone and solicit anything. If someone does that, it's not Barb or myself. So always remember that. Now, remember that we're going to talk about stocks and options, okay? And when we talk about options, remember that options carry a high level of risk and are not suitable for all investors. The information here is provided for general informational purposes only. And also remember that Schwab does not recommend the use of technical analysis as a sole means of research. Other analysis that can be complementary in nature would be fundamental analysis, intermarket analysis, which doesn't get talked about hardly at all. Some of us think that that's mostly interesting. Intermarket analysis is when you're looking at how different assets have relationships to each other, especially over different periods of time. So that's always an interesting topic. And so just realize technical analysis is a start. It's not the only way to look at the market or the position. Now, also remember, we will use the paper money software application for educational purposes. Investing involves risk. And also remember that when we talk about short options, those could be assigned at any time up to the expiration, regardless of the in-the-money amount. And also want to give you a heads up, if you go to schwab.com/events, we have some upcoming events and they're listed throughout the calendar year of 2025. The next up and coming event, so if you're a Schwab client, as you probably are, that's why you're here, you can also, we're going to have the event, the next one in Anaheim. That's on the advanced options. You do not have to be like knowledgeable in advanced options yet. Someone could say, I have never learned about that. You could actually go to that event, May 30th and 31st, right at the Anaheim Marriott. If you want to see more information on like how to sign up and things like that, schwab.com/events. We also have a one-day event that's called a market drive in Miami, the JW Marriott Turnberry Resort. So check that out. And then also a market drive. Barb will actually be there at the market drive. That's at the New York Marriott Marquis. That's near Times Square. So quick heads up on that as well. So it's a great opportunity to actually meet other like investors like yourself in that area. And just want to give you a heads up on that. Now, some resources, okay? So if you're not aware that we do post educational content, our page is on YouTube. It's one way to get our content. And if you just go to the link that I sent you, it will take you to this page. If you have not subscribed, subscribing doesn't cost anything. In this case, it's free. If you go to the link I sent to you right in the middle of the page, you can click on subscribe. What that does is anything that you have a subscription to, which think of it like you're following something. If I went to Charles Schwab, it would just pull up the Charles Schwab YouTube page. If I went to, let's say, the Trader Talks subscription on the left-hand side, it would actually pull me up to, let's say, this page as well. So just also remember that we have videos, okay, shorts, live videos like the one we're doing now, and we also have playlists. So you can actually pick the content that you're trying to learn really about. So quick heads up there. Now, also what I want to do is for this class, before we hop right in, you're now going to see that this link that I'm sending to you is really a list of a playlist of classes that we have done. So what you're now going to notice is, and let me just kind of make sure we're, take that back. Let me fix that in just a moment here. pull that back up. Just want to make sure I'm sending to you the list, the playlist, and just want to check something. We should be good to go there. Okay, so that link that I gave you should pull up this list, the playlist. And what you're now going to see is the playlist on the right-hand side. This really gives us what are some of the previous classes that were taught. Example given, bullish trend. I call them bullish trend tsunamis, okay? Bullish and bear setups. Trading on feelings or technicals. Why different asset classes. Market at a potential key level right now. Snapback rallies and option protection. So these are some examples of classes we've done in the past. So it kind of gives you a flavor of like what we talk about, okay? Now, just real quick as we get going here, I want to go ahead and just hop right in. And what we want to kind of do is kind of take what's happening in the current market live. And then what we do is we really practice by looking at indexes, sectors, stocks. We practice stock and option examples in 2 paper money accounts, okay? And you'll see that here today. Now, let's kind of start by just kind of taking a look at what's happening so far. So first off, if you don't mind, I'm just going to kind of go back to what we said yesterday, just briefly. Let's start here. And what we've been really watching over the last 2-3 days or so that we've been getting together is really talking about the VIX, okay? Now, the VIX, we're trying to get a crossover. If you kind of zoom in on that, you're seeing it's kind of pinching a little bit. I know Lisa is watching. I know she is, okay? See, it's pinching still, and I'm watching it as well, okay? Now, if you take a look at this, what you're now going to notice is we're not seeing, so from the credit downgrade of the U.S. government on their debt, you actually see that we haven't really seen an escalation of fear. The key word is yet. I do want to remind us, though, okay, that when we're kind of in this situation of low VIX and bullish MACD divergence on the bottom, one thing I want to make sure that you're aware of is the sectors that we typically see that are probably not really surprising to see them up, moving up, is going to be, and I'm going to include, and we have included, number one sector. Now, it's not really a sector, but it's been trading like a sector. That number one sector is gold, okay? Gold, as volatility is low and there might become more selling or fear or just pull back in the market, etc., gold is actually trading up near the top. We did include that in the sectors. The number 2 area that we're actually seeing is staples. Is that surprising? Do we see this pattern often when the VIX is low and diverging? This is not unusual. You really take a look at what we're seeing in the staples, and you're seeing that as of yesterday did breach the diagonal line. Chris B brought up healthcare. I'm going to come to that. I do want to take a look at that area and one of the stocks that, well, 2 of the stocks that are in that space. And what I mean by this breaking out, if this diagonal line had really been resistance, we did see it break out, left a hammer there yesterday in terms of candlestick wise, and then a little push here today as well. This has been the first time we've seen the MACD up at this level in a while as it's been doing consolidation. So stocks that would be in staples would be like what? Like what are they? What stocks in consumer staples have been going to the upside? Now, just going to tell you the way it is. Altria has been a little hoarse to the upside. Little pullback here as of lately. We still have 100 shares of stock. I'm going to come to that in just a moment. We also see Philip Morris. That has also been a little hoarse to the upside. It gapped down, but it actually went back above that gap and then had a moving average crossover. So you're going to see that a couple of these staples names, which stocks are you seeing in that space that are getting a little push? Now, you could also probably think of grocery stores, Kroger, Costco, Walmart, and other stocks in there might be getting a little lift. We'll come back to those in just a moment. The other one that we're seeing a little lift on is a brand new high in utilities. Now, again, I said this comment yesterday. Think of staples, think of gold, think of utilities, think of real estate, think of healthcare. These are like your winter coat, okay? They're your hat. They're your gloves, okay? These are what we would call seasonal. When people think there's maybe a risk of the market consolidating and or pulling back, okay, which might be causing fear to rise, think VIX, okay? People typically go to these areas and say, I want a winter coat right now. I'm not going to wear it the whole entire year, perhaps, but I want something that if the market became a little colder, get that? Colder, okay? They want maybe something that could be seasonal and try to protect them a little bit more from market volatility. It's not to say that these are not correlated to the market, but they might just have different characteristics, like more steady on revenue and earnings per share. They also pay a potential dividend. Remember, with dividends, they're not guaranteed, and they can go up or down, and they can be cut completely, okay? Or just stagnate for years. So the other thing is I want to kind of bring out is when you look at that, what stocks are you watching in utilities? Type that in the chat, and we won't tell anyone, I promise. The real estate has actually held in there pretty good considering where the rates where they are. Now, if you said, James, I'd be really interested in knowing where you could see the rates. You could type in TNX:CGI, and that's going to give you 1 point on the curve of maturities, and that's at the 10-year. That's how you can really see what the 10-year rate is, okay? Now, if you said, look, I want the 30-year TYX:CGI as well. The one thing we would actually have to say with real estate is it's held up a lot better than we thought, and it kind of also has this pattern. If you take a look at this, it kind of has a little drop down, right? Little come back down, run back to the upside, pull back down, run back to the upside. It does have an inverse head and shoulders. So we could say that, hey, real estate, maybe the one thing about real estate that we all have to agree with, you don't have unlimited land, okay? That's number one. And the areas that people maybe work in, I live in Salt Lake City. I mean, we're surrounded by mountains, okay? So even if you said, look, I think the house is overpriced, there might not be a ton of places where you could actually get an actual physical lot that you want per se. And it pushes people outside the valley and so on. Now, you might have certain areas that are surrounded by water, et cetera, and you have the similar thing just with water, not mountains. Now, so keep an eye also on real estate. The one other area that Chris B mentioned, and Chris B, if you have maybe some stocks that you say, hey, James, some of these stocks I like to kind of keep an eye on are what? I'll name two myself in just a second, but I want to give Chris B a little opportunity here, a little love. Now, the comment that he made before is healthcare bottoming? Well, let's kind of talk about that. Where was the bottom on healthcare? Well, the bottom on healthcare before, right around 1247. It doesn't always have to go down to that area. What might give an investor maybe an idea that it might be bottoming? Now, in the last 10 days, we've made a lot of comments regarding lower shadows, also known as tails, okay? Now, sometimes those lower shadows and or tails can be signs that investors are buying on what they call the dip in the price, where it could be intraday or intra-week down to a support area. What else might give the investor the idea that that might be getting to the bottoming area? Number two is a divergence, okay? Now, when we say that it could be reaching a bottoming, does that mean that it has to go up and take out a new high? No, not necessarily. It could just go back up to where it fell down from. So some traders, they like to buy at and or near lows where it's pushing back to the upside, okay? And they're just making a trade. Now, one of the stocks that has actually done quite well is yours truly. Now, let me start with the one that's been under pressure. And by the way, which stock in that space of healthcare has been under pressure? Which one? And it'd be hard not to notice United Healthcare. Now, United Healthcare, they've had a lot going on, to say the least. And there's been some allegations. And the reason why I use the word allegations is, well, they're not guilty until they actually go to court, things like that. But their CEO, CFO, supposedly, okay, you could check on this, they've actually, when the stock hit some lows, they stepped in to buy some shares of stock. Now, it's not stop options granted by the company. It's the board buying shares. Now, could they be wrong? They could be, okay? But if someone's going to invest their own capital, it's kind of at least, and Jamie Dimon did this back in 2009, okay, with Chase as well. But when the board or leadership comes in and buys the company in an open market transaction, it's kind of interesting. Okay, so that's something to continue to watch. And the volatility on that has probably been quite high. So now if the healthcare is going to go up, you like to think that UNH might start to heal a little bit back to the upside. The one stock that we need to at least bring up, though, is CAH. And this is the one that has been like, wow, what a horse, okay? It has not been involved in the pullback of the IXV at all. Now, what I want to do is I want to kind of show you something. Let's go to studies just real quick. And what I'm going to do is just type in relative, okay, strength. Now, when I type in this relative strength, I'm going to click on that. And now what you're going to see is, and we went to the test tube right there, so not too bad. And then just in that little pop-up box right there, we just type in relative, and it's showing us what matches that. Well, we're typing in, we're going to click on the third one down. Now what you're going to notice is it shows relative strength, and it defaults to the SPX. We're going to click on the gear, which is the settings, right? And I'm just going to take that out and just type in IXV, okay? The IXV is really the healthcare sector. I'm using the index. You might use a different product. I'm using the index, apply, and then okay. Now, what you're now going to really notice on this chart is the red line down here below, that's IXV. That's the benchmark, okay? The Cardinal Health, the performance of Cardinal Health, the relative strength, is the green line, and it's been above that benchmark, the red line, for a while. The benchmark doesn't change, it's flat. And what you're now going to notice is that green line is getting further and further and further and further and further, showing that the relative strength of Cardinal Health is improving relative to the benchmark of the healthcare sector. Now, speaking of Cardinal Health, let's kind of look at an example trade on this. Now, if we were to look at the chart of this, uptrend, sideways, don't know, could be an answer too. What would you say here? What would you say here? Okay. Now, I think it's the goal of many investors. They're trying to find stocks that could appreciate in value. Number one. So is there a current trend, and might that trend continue? Number two with that is, if the investor were to get in a position, is there a visible area of support over the last maybe 1, 2, 3, 4 weeks? Now, some investors, they like to look for when the stock ran up and then pulled back. Where did it pull back to? Why do we care? Well, because that pullback, that's like the higher low. This could act like a potential level of support. All right. Now, if you look at the chart, what we also kind of like to see is different moving averages. The shorter term moving average that's the closest to the price is the 10-day whole moving average. The second moving average is a 20-day moving average. Why the difference? Well, you want one line to be more sensitive, that's tracking momentum, and the secondary line really to track more what we call trend. Okay. Now, if we start to get the 10-period moving average across above the 20, we're now seeing momentum get above the trend line, if you will. And, when that stock is really above the 10-period moving average, there might be some spurts of candlesticks that shoot to the upside, potentially. That's the idea. Now, in our example, what I'm going to do is I'm going to pull up CAH. Now, one thing that we're going to do first off is we need to quickly address something, okay? Why am I going to do this now? Well, because if I'm going to put on Cardinal Health, okay, the stock position, there's no more capital in that account, okay? We're in a paper money account, okay? And last week on Friday night, we were assigned 100 shares of stock. Now, what does that mean? Well, it means that we had a cash secured put. We sold the put. We said, hey, look, we'll buy the shares at the strike price, okay? And if you come back to this, what you're now going to see is the strike price was 200. The cash secured put can become shares if the stock were to close below the strike, or if the investor was assigned to buy those shares prior to expiration. Now, is this bad? Well, the first thing, and why are we talking about this? Okay, I just want to make sure we're not leaving Cardinal Health, but I need to take care of this position. This position is way, way, way too big for this account. Most of these positions we have are really going to be about 60, well, at the most, probably on this account, at the most, probably 5,000. I mean, that's at the most. So we're probably going to need to sell quite a few shares. If we're trying to get down to, let's say, $5,000 worth of capital size, and this stock is $204, how many shares do we need to really, how many shares are we going to have if we only wanted to have a capital size of 5,000? Well, it'd be about 24 shares. Well, if we have 100 shares, how many shares are we going to get rid of? Answer, 76 shares. Now, we got a little lucky. So we were assigned to buy the shares at 200. The stock's at 204-ish, okay? So now this does not include the premium we received to sell it, which made. And then the second is this is the stock appreciation from where we were assigned to where the stock is now. So what I'm going to do before we do the Cardinal Health trade, but I had to do this first because we need capital, is we're going to sell some shares of stock. So how do you do that? We're going to go to the Monitor tab, where it monitors our orders and our positions. Number two, we're just going to go right down to the Amazon position, right-click on it, create closing order, and then click on, we're going to pick the top row, we're going to sell the shares. Now, this says sell 100. Well, yeah, it says sell 100, but we can edit this. And what we're going to do is we're going to say, look, we're not going to sell 100, we're going to sell 76. What is that going to do? Well, it's going to give us some of our capital back so we can do the Cardinal Health, okay? So when I sell 76 shares, it's going to leave us with about, okay, 24 shares of stock, and it's going to boost that cash back, hopefully. Now, just because we put the order in does not mean it fills immediately. It took a second. Now our cash that was $1,500 is now up to $17,000. Now what are we going to do? Well, now that we have some cash, we're going to go back to that Cardinal Health chart. And what I'm going to do is I'm going to just go to the Trade tab, okay? Now, maybe some of you have never seen the Thinkorswim platform before. I'm kind of showing you some of the functionality. We're going to go to the Trade tab. So if I want to do a trade on a stock or an option, go to the Trade tab. We're just going to type in the symbol. There it is. And we're going to click on the Ask Price, okay? Now, if I left click on the Ask Price, it's just going to bring up a buy order by itself. If we right click on the Ask Price, it's going to give us a menu. And we're going to go down to Buy Custom, and we're just going to say with stop, okay? With stop. Now, when I do this, now what we're going to see is we're going to go back to the capital size we just talked about. Now, if you click on the pool balls there, click on it, it goes to percent. If I click on the percent, it's going to go to a dollar amount. So this is just saying, well, how much capital do you want to put in? In our example, we were showing about $5,000 of capital, which would be about 32 shares of stock. That's all. You can do it both ways. Shares, percentage of the account, a dollar amount, all the above. If I know that it's going to be 32 shares, I can just now type in 32. So we're in green, we're buying 32 shares of stock, and it's at the price of $155.60. Now, when we go back to the chart and said, where do we see the support? Well, one of the areas we saw it at 147, okay, 52, less 2%, and it's going to give us a stop at 144.56. Now, if I go back to this and say, okay, 144.56, there it is. Now, when I go to day to GTC, that's just saying keep the stop, just not valid for today, but good till canceled. How many shares? 32. Okay, so why do we do the Amazon again? Well, Amazon was over position size, had too many shares. Okay, that came from an option position, sold some of the shares, and now what you're going to see is use some of that capital to buy shares of CAH. Okay, now, the comment actually from Brittany is, why not sell at the market? Well, the biggest thing on when someone sells, typically if you sell, okay, Brittany, you normally like to say, is there a certain value you want to get or higher? So that's the advantage of selling at a limit price. you're saying, look, I'll sell at this price or higher. If you do a market price, you're kind of at, you kind of hope the market doesn't keep going down because the price could be lower than maybe what you wanted for. However, if you said, look, I don't have a ton of time and just get me out. That's when people typically use sell market. Out of 100 trades that we will do, how many times do we do sell market by itself? Like never, okay? So the answer to that is why? Well, because we always put the order in. If we don't fill in the first 2-3 minutes, we manually move the order. Why? Well, because we're always trying to sell limit to get this price or higher. In other words, we want to know what that order could be filled at the lowest. Now, Brittany, you might be different, but that's kind of our viewpoint on that. Confirm send. Notice with the stop orders, there's no guarantee the execution price will be near or equal to or near the activation price. Going to now send the order. Now, I want to go back to something just real quick, okay? So the first thing is I want to make sure we're crystal clear on is these webcasts that we're doing, they're not one-offs, okay? So some of you might be here because you got an email and said, hey, we're having a live class. We invite you and welcome, okay? So this link right here, what you're now going to notice is, okay, it's going to get you to the schwab.com/coaching. So if I just went back to, let's say, hey, James, I just went to schwab.com. How would I get to this page? You go to just learn. And what you're now going to notice is Schwab Coaching. That's not too bad. Learn Schwab Coaching. And it'll take you to exactly the page that I sent to you. Now, when you get to that page, you're now going to see that there will be live webcast and virtual workshop. Okay, I'll hit that in just a sec. On-demand webcast. Okay, and then in-person events. Okay, now if I click on live webcast and virtual workshops, and listen to what I said, virtual workshops, okay, the live webcasts are typically 45 minutes on different topics. And if you said, well, what other topics do you guys teach? Okay, now if I go down to the date that we're at today, okay, and here we are, so you're going to see we're in May, and if we went down to the date of the 20th, you're now going to see that it's highlighted to this day, and we are on the Investor Master Series. Here we are. We're like a TV show, okay, but on the internet, and you're going to see that Getting Started with Options, Connie Hill will do, another instructor. We're going to see that we also have a class on long options, okay? Getting Started with Technical Analysis, you should recognize the name, Barbara Armstrong, who is in the chat. So how much are these to go? Well, they're free. If you're a Schwab client, you can just log on, okay? And so you get to pick the topics that interest you. And remember, they're live and recorded outside 2 classes that I'm aware of on ETFs, okay? So just want to make sure you're aware of that. Now, let's kind of go back to some of the things we were discussing. So are there any questions on what we talked about so far? Okay, now I see a couple comments regarding market orders, etc. The comment that I do see is let's go back to Costco. Okay, well, let's go back to Costco, okay? Now, the one thing is we did talk about, so Costco could kind of be viewed as a staple, if you will. Now, we know that some of the stuff that when you first walk in, you don't need the 90-inch TV. Okay, now, here we go on Costco. Now, the question I have is, do we have any position on Costco? Let's just double check, okay? So when we pull up the paper money account, let's go to the monitor tab. Do we have any position in Costco? I don't see it there. If we go right there to the IRA, do we have any position in Costco? The answer is, yeah, we do have some shares of Costco. And those were purchased, check me if I'm wrong, but they were purchased yesterday. I don't have anything to say on Costco besides it did actually make a little shorter term high. Now, remember we talked about stop adjustments, okay? Now, just a quick reminder if you were not with us. The reason why we did the Costco example is we saw the stock hitting the 10-day high, which is the orange dotted line, and that blue line, okay? We've been talking about that since Friday, right? Now, what you're now going to notice is I just want to quickly check if we said, well, James, could we move up the stops? Well, we can quickly answer that. And that's the purpose of these scripts. So this actually, the white line on the bottom, the red line, and the yellow line. Now, what you're now going to notice is the white line. What is the white line? The white line on the chart is an 8-day low. The red line is a 10-day low, and the yellow line is a 20-day low. How do we know if we can move up our stop? Well, if those lines are not increasing, which they're not yet, that means over the last 4 days, the stop adjustment has not moved at all. Okay, we're looking at now the other question that was asked, which is what are the actual dots on this chart? What's that dot there? What's that dot there? So what it's doing is it's going back the last 8 days: 1 day, 2 day, 3 day, 4 day, 5, 6, 7, and then 8. So what it does is it goes back the last 8 days and it just plots a dot on the chart where the 8-day low was. That's what the dot is showing. Okay, now the red line, it's the last 10 days. Yellow line, if you like to set looser stops, is 20 days and so on. So this kind of gives us a visual way to kind of execute or adjust stops, etc. So on Costco, I don't see anything to actually change yet. Now, speaking of, I want to go back to Mickey D. Now, Mickey D, if we went back to Mickey D for just a second. Now, if you said, James, I don't have this chart setting, I would like that. If I say, pretty please, will you give it to me? Of course, I'll give it to you, okay? A little fun with you there. And by the way, just so you notice, some of the presentations that I have seen in my life on the stock market, it's very, very, very dry. Okay, that's one of our specialties here at Schwab Coaching. We kind of like to make it a little interactive and lively, and a lot of you just have a lot of great comments to say, so we like to introduce those as well. And some of you are quite humorous, so we like to introduce that as well, but at the same time, learn something. So this link that I sent to you is for this chart. Simply, you can go up to the very top right, setup, go to open shared item, and then what you could do there is set up open shared item, copy and paste, put it right there. Now, I want to talk about 2 discretionary stocks, okay? Number one is I want to go back to Mickey D's, just kind of take a quick look at it. Then I want to go to actually look at DPZ for just a second, Domino's Pizza. And I might also look at Nike and Sherwin-Williams. So if you think about the stocks we're going to talk about in the next 12, 15 minutes, it's really discretionaries, okay? Now, when I copy and paste in what I sent to you and click preview, and then import that, it's just going to bring up a mini chart. Okay, and now if you say, well, James, on my side, how do I save that? Oh, simply go to Style, go to Peter, who has great restaurant ideas. Anyway, a little fun there, Peter. Hello, Peter. And so if we put it right there, where does it go? Style, load style, and there's Peter right there. So we could have different views on the charts as well, okay? Now I want to go back to just this real quick. Let's do an option trade on this. So first off, we talked about this yesterday, but let's kind of maybe do this from an option perspective, from a vertical perspective, okay? Now, what I'm going to do is I'm going to go to the 3-year weekly, and why are we talking about this? Well, because remember, what the investor is trying to do is they're trying to put in stocks or option positions in their portfolio, if they consider those, that might go higher. Now, we are not into the season of the McRib, okay? We are not into the season of the fish fillet, okay? But sometimes people go crazy for that stuff, especially in the McRib. Little fun with you there, dating myself. Now, if you take a look at this, we're kind of wondering, could Mickey D's go to the upside? Now, what I want to do is here, let's kind of talk about an example. We're going to go to that smaller account. There it is. We're going to do a trade. So we're going to go to the trade tab, check right there. And now what I'm going to do is just type in MCD. Now, when I type in MCD, this is the stock information up top, right? Stock information. We now see that down here below, okay, we got the option table. We could go down and say, which options do we want to do? Let's say we do the 20 Junes 2025. Okay, that's what the 25 means. That's just short for 2025. the number of days to expiration, and also the number of shares in the contract. Now, what we're going to do in this example is we're going to look to sell a put strike. So calls on the left, puts on the right. Now, if you take a look at this, what we're going to do is we're going to come down here to the 315 strike. If we sell the put, where do we want the stock to go? Well, if we sell the put, we want the stock to go up. If you buy the put, you want the stock to really go down. So in this case, we're going to sell the 315. Now, the risk, if you sell the 315, the risk is the stock could go all the way to zero. So what we're going to do is we're going to cap the risk to the downside. We're going to sell the 315. And then we're going to buy protection underneath. Now, when you sell a higher strike put and you buy the lower strike put, this is what we call a short put vertical. Well, let's logically think this through. If you sell the put, you have an obligation to buy the shares at 315. If you buy the put, you have a right to sell the shares at 310. So let me repeat that. We buy at 315, you have a right to sell at 310. What's the defined risk? $5. But it's not $5 completely because you also received a $1.50 credit. And so $5 spread width less $1.50, that gives us a built-in maximum loss of $3.50 or $350. Now, some of you might be new to this and say, what person would actually do something where the reward is less than the risk? And the answer is someone who's trading probability. Now, what you're going to notice is at the expiration, the stock would need to be at 313.50 or higher. That's break even. That's break even at expiration, not today. Well, where's the stock now? At 320. Now, here's the deal. If we're in the June expiration, do we have to wait all the way to the June expiration to try to get out of the position? Oh, we could try to get out. We would just need to verify what the liquidity is at that point in time. But on June 20th, they expire, okay? Now, if we go ahead and send this order on a one contract basis, position size for this account, we're going to send the order. Now, speaking of that, I'm going to also go down to just real quick another one that's kind of got, now I'm going to kind of show one of the stocks that I wanted to bring up, which is, let's go back to this one. I just want to say something just real quick on Boeing, okay? We're going to do a vertical on Boeing as well. We've been keeping an eye on this. This has been the one that kind of had some very, very poor fundamentals and execution at the company. The new CEO came in, and sometimes new CEOs can cause some of those disruptions that they've been having to be fixed over time. Now, what I want to do is I want to go back to this, and let's say the investor said, James, I want to go to Boeing for just real quick. Let's put that in the paper money account. I'm going to go back to the trade tab, BA. Now, what we're going to do is same idea. Now, by the way, how do you really learn this? You paper trade. This is a paper money simulated trading. It's not real, okay? Allows you to learn some different strategies and practice, okay? Now, what we're going to do is I'm going to click on this 205. Now, this, when we look at the strike, okay, 205, it tells us a term called delta, okay? And that delta of 0.40 is telling us statistically what are the odds of the stock to close 1 penny below the strike at expiration. As of right now, answer 40%, okay? 60%, the stock could be above that. The other thing that actually also tells us is that if the stock moves up or down $1, approximately the option would move by about 40 cents, okay? Now, why did you say approximately? Well, because the bid-ask spread could be based upon the liquidity at that point in time. Liquidity, think of it like a grocery store. Is the grocery store just constant clients coming in left and right? No, sometime of the day it's just dead. Same thing with the stock market, okay? And when you get, let's say, less liquidity, buys and sell orders, the bid and ask spread widens out, and that can kind of make it where guaranteeing that it's going to move 40 cents on a $1 price move, that's harder. And so that's a nuance, but it's important to realize. And also realize that liquidity is not always constant. I'm going to right click on the 205, sell, and what we're going to do is going to go down to vertical, and we're going to do the 200. Now, when you're first learning maybe about options, some investors might choose verticals. Now, you could choose what you want, but the reason why some investors do that is they tend to be a little bit more forgiving. That does not mean that they can't lose money. It just means that they're more forgiving in terms of that the stock can go down some and still be above break even. Number one. Number two is they're not as sensitive to price direction as stocks are, okay? So if the stock currently is at 208 and the break even at the June expiration is at 203, the stock could go down $5 worth and still be above break even. The way this trade makes the most money is the stock closes above 205. Now, for some of you stock investors out there only, why would someone even consider this? Well, on a stock trade, there's not time decay, okay? People like to sell options because there can be time decay where even if the stock goes flat, the option trade could benefit. The only way that's a true comment for a stock investor is if the stock pays a dividend. We talked about what that risk was before. We're going to send the order, and we're going to see if that one fills. So if we went back and said, hey, can we see the orders that went through here today so far? We're going to go back to the monitor tab because it monitors our orders and our positions. Click on that. Second, we're going to go down to filled orders. And when you look at filled orders, anything that fills, we can see it in chronological order. So if I take a look at this, what filled here today? Well, number one is we sold the Amazon shares, okay? It was too big of a position. We used some of that capital, number one, to buy Cardinal Health. Number two, we actually then went into Mickey D, did an option trade. Number three, we also did a BA trade, and we could see those there. And when you look at the position statement, it just states your positions, and it lists those from A to Z. Now, the other one I just want to try to quickly squeeze in here, and I've never done that before, ever. I want to go back to DPZ for let me bring up just Sherwin-Williams, okay? The one I want us to also keep an eye on that has a very, very, very wide channel to it is Sherwin-Williams. Now, if you say, James, I have lots of ideas in my head, but it's so hard to execute sometimes, feel free to use the alert, okay? Wherever you right-click on the chart, right-click wherever you want the alert to be. We're going to say, look, alert us if Sherwin-Williams starts getting at or above. Notice when we right-click on the chart, create alert. And wherever we right-clicked on the chart, that's the alert price. And we're saying, look, if the stock price gets at or above this price level, we want to be notified. Send us an email, shoot us a text, whatever. This could be a potential breakout wide, okay, channel. So it's not breaking out yet, but it is also making some higher lows going into that area of resistance. So we're going to keep an eye on that one. Now, the one I want to finish with is DPZ, okay? Now, DPZ, we're kind of seeing a lot of these cup and handle type positions where they drop down in price, they ran back up, and then you pull back. And now I want you to kind of notice, we call this the cup, which obviously you know, okay? And we call this part the handle, okay? And I don't need to explain that. You live long enough, you know exactly what I'm talking about. And this is what we call the rim of the cup, and I don't need to explain that. So sometimes the pattern of the price can leave like what we call technical analysis price patterns, which Barbara teaches, okay? Now, the significance is in the cup, the highs at the bottom were kind of right around there. Now, this is what we kind of say sometimes is old resistance can turn into new potential support. Now, some of you might say, James, I like to do positions where maybe there's at least a minimum reward relative to the risk, okay? We're going to do a long call vertical on DPZ. Now, the reason why we bring these up is sometimes technicians, they measure from the bottom of the cup to the top, and that's really from about 420 to 500. That's $80. $80 on top of 500, that's a 580 price target. Now, that does not mean it's going to go up to there, but that's how some technicians might look at this. Now, in 30 seconds, what we're going to do is on DPZ is we're going to go ahead and go to the trade tab, and we're going to look at the call side, and we're just going to end with this. We're going to go look at the money call, the 490, and what we're going to now do, and I can't do that because it's wide, so I'm going to have to buy the shares. I didn't see that wide before. Now, I'm out of my time here today, but what I am going to do is I'm going to do the shares. Why are we doing the shares? The options that we're looking at, they're wide in the bid-ask spread, so we're going to do the shares, okay? And what I'm going to do is we're going to buy the shares of the stock, okay? And now what you're going to see is, okay, and I'm wrapping up, 5,000, okay? And some of you can see the bid-ask spread. It's pretty wide right there. At least it is right now. It's going to be about 10 shares. And the stop that we're going to put it at, if we said, where's the stop? And I'm just going to verbally speak to it. The investor might say, James, I'm going to set the stop below 480, okay? Now, that 480 or 478, that stop could be at 468. And here's what I want you to do and invite you to do is I want you to practice 2 stock trades, 2 option trades, okay? That's number one. Go into the paper money account and practice those. And we would take that number and we would just type it right in that stop field as well, okay? Now, I'm out of my time here today, so I'm going to just I verbally spoke to where that stop is. The DPZ, the last trade was a stock trade. Now, remember with what we discussed here today, you could also join us on other sessions, okay? And stay tuned for our next webcast coming up with Connie Hill right at the top of the hour. Remember with what we talked about, all of our investing examples, we talked about what the risk is, and that's what the investor needs to remember and know. And also stay tuned for Barbara's class coming up later today on technical analysis. So we welcome you to join us again throughout the day. And also remember to subscribe right on the YouTube channel as well. So that way you can see all of our content right there. This has been the class on the Investor Master Series. Have a great day. Take care. Bye-bye.